The Mail Today conclave on financial inclusion was held in the national capital on the 19th of October with an aim to debate, enlighten and empower Indians financially. The conclave brought together some of the best Indian minds from banking and finance sector and started off with insightful addresses by the Deputy Governor of RBI, S.S. Mundra, Radha Singh, Chairperson of Yes Bank, and Manish Prakash, President, Airtel Business India.
As per our definition, financial inclusion is the process of ensuring access to appropriate financial products and services in general, and particularly to vulnerable groups such as weaker section and low income group in particular, at an affordable cost, in a fair and transparent manner by mainstream financial institution players. This is how we talk about the financial inclusion. But the question comes that ultimately at some point of time, a productive credit which can be given to these people, it has to come into play. Whatever has happened, whatever will be happening, benefit will start transferring, these are all right sequencing. But at some point of time, productive credit, how all these account holders would get productive credit, it has to come into play. There are roughly around 5 lakhs BC outlets. Large outfits have come, but the supporting hub and spoke control and support mechanism is yet to take place. So as a result, the existing bank branches, a lot of this traffic or a lot of these expectations are going to existing bank branches. Obviously, these branches are overburdened, and it would not be realistic to expect that they would be continue to support. And then somewhere the system would start weakening. But the basic requirement, if you say I want to, cook a bread, then you need to have flour and other ingredients for cooking that bread. And that is the point about providing the productive credit. So the two obvious conclusions are there. In the farming sector, there would be a limited capacity to provide the additional productive credit or to bring more people to support themselves from these activities. Now, the financial inclusion as it has come till now, it is being distributed across most of the banks which are operating, so commercial banks, the public sector, private sector, regional rural bank. These are the players who are in the field of financial inclusion as it is standing today. Then there is second set of players who are there but who are not so much in the space of financial inclusion at that point of time. Cooperative banks are there, NBFCs are there, MFIs are there are NGOs, there are agriculture credit societies, and then there would be third set of players who would be coming. I think key to the financial inclusion is that all these players are taken into the activity or into the national plan of financial inclusion in an orderly manner. When I was talking to my team internally, I say we will have to think about creating a grand alliance kind of thing. And this grand alliance would be Reserve Bank of India, all other regulators, NABARD, SIDBI, and Government of India. And Government of India, particularly represented by Department of Financial Services, Ministry of Agriculture, and Ministry of MSME. Until and unless there is a forum and there is a grand alliance of all these players, and then others can be invited and included as the need arises, then the execution would become efficient, then the execution would become possible, and all would work for a common purpose rather than working on a cross purpose. So I think that should be the aim. We should be moving from here onward. With that, I think I'll conclude here and thank you all.
Financial inclusion, friends, is an issue and subject, no doubt, which you all know, is of great significance to all countries, especially those that are fast-growing, who have to be particularly sensitive and mindful that all segments of the population are indeed reaping the benefits of growth. And our government, too, has taken some very decisive steps to promote sustainable development in India with specific focus on financial inclusion. Most of India's development agenda is mirrored in the UN's Sustainable Development Goals, at the heart of which is eradication of poverty in all forms. Financial inclusion and sustainable development are inextricably linked, and India's poorest people who are getting into the fold are indeed made literate of what is the beginning and what is in it for them. We also have some suggestions for expanding financial reach. Number one, convert India Post into the Postal Bank of India, a full-fledged commercial bank to leverage its rural penetration for greater financial inclusion. Number two, banks could make arrangements with post offices for dealing with remittances as recommended by the Rangarajan Committee on Financial Inclusion. That was in 2008 when this committee was constituted. Similarly, banks could be invited to locate their ATM machines in the premises of the post offices. Therefore, in conclusion, I would like to say the following. The current decade is, by all indications, a watershed for financial inclusion in India, as it marks a paradigm shift in banks' approach, partly to the regulatory push and also because of the demand pull. Incomes are rising rapidly, and by 2020, the so-called next billion households with incomes below the middle-class level would have reached a point where they too will actively seek banking services. And lastly, financial institutions are increasingly realizing that offering banking services to those who have not traditionally used such services represents indeed a very profitable opportunity for which the business models will have to be correctly devised. So these are just some takeaways, I think, and the panelists may like to consider some of the suggestions given. Thank you very much.
Mobile-based financial services can create three distinct variety of options in the first go. Mobile payments or remittances, mobile money transfers, mobile banking, and all of this included distribution of investment products such as insurance and so on. And in the next 18 months, telecom companies will connect at least 15,000 branches through these simple, on-the-go solutions across India. The key regulatory reform that we have seen recently is the licensing of the payment banks itself. What it means is technically the entire distribution of a telecom company can turn into a payment gateway, which means by the turn of a button, hypothetically speaking, there could be 100 million bank accounts created because of that new payment bank license that has been awarded. Now, what it does is, it creates a digital payment/remittance gateway to mass proliferate across all the banks, all the smartphone and the phone subscribers across the country. B, it also virtualizes the cash through mobile-based wallet systems, which therefore helps deliver a secure and safe method of delivery of cash to these subscribers. And C, it makes all of this available at a very affordable and a convenient way to serve the country. Although this is a very early stage, the licenses have just been granted. The key to success of this is the adoption, and this is yet to be seen as we try to deliver this in the future. So in the end, there is a definite convergence that you see between a telecom value chain and a financial services value chain. There are multiple ways these sectors are collaborating to create value for their customers, and companies such as Airtel are very much at the heart of this revolution and looking forward to be a part of the next banking revolution that's on the shores of India. Thank you.
Well, we now have the first of our panels this evening. We're going to talk about Jan Dhan and beyond. I'm going to try and flag off a few issues which I'd like all three of you to comment on. What is it that is preventing us from actually achieving financial inclusion? Why is it that we are still obsessed with real estate, with gold? And it's not about the product class. It's about the basic tenets of being able to invest properly. Where are we lacking? Is it financial literacy? And I want the three of you to give me your thoughts on that.
In my experience, there are basic problems. One is about education. As Indians, we have lost about $600 billion on our holding of gold, assuming that it is 25,000 ton. It could be more if you open Padmanabha Swami temple vaults. But $600 billion loss and no comments about it. And in equity market, from top to bottom, retail investors have lost just $30 billion. And there is reams and reams printed about it. So for $30 billion loss, we have all the tears to shed. But for $600 billion loss, we don't even want to make a comment. This education or lack of education forces us to go into real estate and gold rather than in financial assets. The second thing is incentive. If I'm a gold distributor, I can charge anything. Number one, I don't have to buy the gold if I'm selling it to you. There's no obligation on me. I don't have to do any KYC. I can accept cash. And third, if I want to charge 35-40% premium for a small denomination, no one stops me. Fourth, if I want to do some milawat in gold and sell 22 karat gold as 24 karat gold, that's perfectly acceptable norm in the market. So with all such incentives, it makes more sense commercially for me to sell gold rather than anything else. And which is why we have more number of gold distributors, jewelers, than mutual fund agents or insurance agents or so on and so forth. All these things put together has resulted into us losing $600 billion in gold and not making enough on the equity side.
I think there are three pillars here. One is the right product proposition. The other is the process. And third is the infrastructure. So broadly, these are the three things which we are currently missing. And what we have seen, initiative by Government of India, by Honorable Prime Minister, is just scratching a little bit of it in terms of Jan Dhan and the Prime Minister Jeevan Jyoti Bima scheme, and similarly on the accidental insurance. So what is really required in this country, where insurance is just about 4% of the GDP, and if I look at people covered, I think just about 10% of the population is covered under insurance. And we undermine the need for protection when we think about insurance. And that is what we need to create. So one, in terms of awareness as a protection rather than as an investment avenue. Obviously, it also serves that purpose of investment, but what is more important is protection. And this is what we have seen with the Prime Minister Jeevan Jyoti scheme. Just a very simple product, integrated product, and we were able to kind of reach out to 10% of our population with that. So big success, but I think this is just the beginning. We need to do a lot more in this particular space. And when we reached out to some of people in the market, what came out was that people are actually interested in going for protection. But what is stopping is the proper need analysis. So while the regulator has done something in terms of assessing the need, but I think rather than just a form filling exercise, unless and until it becomes really in terms of checking what exactly is the customer need, I don't think so we can push this beyond a point. And that is when we'll see financial inclusion rolling out and we providing wide coverage to people across different segments.
I went through the document of Prime Minister Jan Dhan Yojana, which is the leading force as far as financial inclusion for us is concerned. And that says that this is the starting point. But it has not gone on to say what exactly is the roadmap for the future. He wants us to move towards financial empowerment. Financial empowerment is all about letting this society, our citizens, participate in the growth of the country. Let's see the big picture. What is the growth India is slated for? Nilesh is better equipped to, put a number to it, but let's say by 2025, India is going to add 1.5 to 2 trillion to its GDP. So there are 25-30 crore people in India today who are ready to participate in a new pension scheme in mutual funds. And why do they need to participate? Let's go by data. Our prime task as households in this country to be empowered is to be able to beat inflation. We are one of the highest inflating economy in the world. Unless they beat inflation by 2 to 3%, their lifestyle will not improve. And that is what we really want. And what are the instruments? While in last 20 years, it has been an anomaly that gold has given more than inflation, and even a bank deposit has given more than inflation. But these instruments are not designed worldwide to beat inflation. So you need to go from savings to investment, and investment in form of capital market instruments. It could be debt, it could be equity, it could be a combination of two. I think now it is truly possible by simplifying processes, common KYC. Now, in the next 3 years, we can create a revolution in financial empowerment in India.
India has a fairly impressive mobile penetration of more than 90% now. Why haven't we been able to still include, financially more people than we have so far? What are the challenges?
This is quite an interesting conversation. It's like about comparing why do millions of people have mobile and millions of them don't have landline. Because there is a leapfrog of technology which has happened and enabled certain things in the recent times to come the way they have come, in the volumes that they have come. That said, if you look at the seriousness of the financial services, the KYCs, the documentation, the security, the controls that are required, warranted to ensure that the money is safe, the right guy is depositing the money, AML, PML are taken care of, it warrants restriction in a way. I don't say that it warrants seclusion, but it warrants certain, or it has at least led into certain restrictions, rendering to a limited set of people.
See, mobile has a small screen. That itself means that you can't render a lot of data and a lot of comparison on that screen. The second, the product complexity. Third, customer will not go on and buy a product on their own without understanding what they're buying in case it's a full product. And for such products, they'll need to talk to someone, whether it's through a chat mechanism, whether it's a calling mechanism, whether it's a face-to-face meeting, but they need to understand a bit more. And Indian market is very, very cost conscious. The amount of time they take to decide even on a simpler product is quite humongous. So that's something which needs to be done. You just can't avoid it today. So at some point when the market evolves, maybe you can, but today I don't think the processes and the products are at that stage. And that also includes, in fact, the payment mechanisms that are available. The payment mechanisms also need to evolve to work for the mobile sales.
I think, the key challenge when you talk about the financial inclusion of the bottom strata, I think is simplicity. I think today, what is lacking is, ensuring that systems and processes and products, are designed with the intent of meeting the needs of the bottom strata. And I think today that's not the case. Digital, is a level playing field creator, right? And what it does is if you are able to come up and define simple products, it allows you a humongous reach. So while the reach is there today, I think thus far we have not really pushed the envelope on being able to drive product simplicity. And I think what is happening now, and I think the regulatory folks, at least in insurance, are driving that through the idea of these common service centers or CSCs. So I think that's a clear example of what simplicity and sticking to a script can help do for financial inclusion.
The whole KYC process in financial services, whether it be insurance, banking, is rather complex. By the time we get around the three proofs, ID proof, age proof in insurance, and address proof, it takes the mickey out of everyone. So the e-KYC process, if we can accelerate that, the central repository, I think the seed of that thought has already begun. If we have that one number, and is that number going to be Aadhaar? What are the courts going to say? How can financial institutions benefit from it? So if that one number helps us in solving much of this running around on these three aspects, I think we have a big win. Number one. Number two is simplifying the paperwork. We are a paper guzzling industry. We need paper at all entry points. So a proposal form is required. We need a wet signature. A digital signature is not yet in vogue. Do we need to have some changes in the IT Act for it? Perhaps. That's what our regulators are saying. Because as complexity increases, even if it's a great product, it doesn't sell. So I think that's a big improvement area that we can do. So process, product, and I think mindsets are also required to be changed. Insurers' mindset is still, when you think digital, we really think of the internet savvy HNI. We don't think as the mobile holding mass market customer. If we start thinking mobile mass, I think then we'll be talking true digital and true financial inclusion for India.
Bringing friends. Something which has always eluded us was the dream of having every family a bank account. Till our Prime Minister announced on 15th of August that before 26th of January, we'll make sure that there will be universal banking. At least a family will have an account. So this is in itself a record that such a large number of people could be included into the financial mainstream. And that speaks about the commitment, the ability to execute, as well as something which is so socially desirable that could be accomplished in such a short time. The reason is not just financial inclusion is a mission in itself. It's means to an end. If you get people to have participate into the entire financial mainstream, then so many new benefits could accrue to them. As we could see, subsequent to our own, the most successful mission of financial inclusion anywhere in the world, the Prime Minister could launch the second wave of financial products. And that was for family insurance, that was for making even pension. Parallelly, government could also launch a very interesting program for direct tax transfer, cash transfers for so many of the government programs. The advent of technology has made it possible. The commitment would make it feasible. And as a consequence now, a host of new opportunities are available to the country. One of the other issue that we normally don't associate with this is the issue of tax to GDP ratio. Despite the fact that we are $2 trillion economy, our tax to GDP ratio is far less than the OECD countries. With the GST coming in, we try to get our tax to GDP ratio increasing with banking backbone which is in place. It will be very difficult for somebody to evade a tax when it goes to the banking transaction. And therefore, including direct tax to GDP ratio, which will come through banking system, making indirect tax to GDP ratio rising thanks to GST, a consolidated consequence of this will be a huge spin-off benefit to the fiscal system, to financial health of the economy. And in turn, if you are financially strong, then only you could do some welfare activities. With this backbone available now, I think we are really could usher on a very interesting journey. We have made a beginning right at the bottom, so I think the superstructure will be built over a period of time, and therefore there are challenges, but challenges have to be overcome with the type of teamwork that we need to have put in place, which I'm sure will happen through this process. Thank you very much.